Hello and good morning. Nice to see everybody. Nice to see Mark. Mark's here. Eric's here. Nice group of people. Nice to see you both. Seeing as this is a meeting, just make sure that you guys are muted. Everybody's muted during the conversation, but do feel free to turn on your cameras if you'd like to. I'm firstly incredibly grateful to be able to be running this workshop. We have two phenomenal speakers with us today. Marco Schletz from the Open Earth Foundation, who is using blockchain as a way to effectively do better climate accounting and has a really broad understanding of what's happening in the intersection of technology and climate. And secondly, we have Marcus Aurelius, who is back from ancient Rome to tell us about Klima DAO. Marcus is protecting his identity today. He's working on the Klima DAO platform, which is effectively building a liquid market for carbon offsets, which is enabling significant growth in the price of carbon and ensuring that people can buy and sell carbon more effectively. I'm really excited for this conversation. The first person that I'm going to invite to introduce himself is actually, I'm going to ask just a quick set of introductions, maybe from Marcus and Marco. So I'll go Marcus, then Marco, and Marco, then you can quickly kick us off, share your screen, and get straight into the detail. So Marcus, how about you quickly give us a one-line introduction of yourself, mate?
Hi, everyone. My name is Marcus. I've been working with Klima DAO for about 3 months now. I'm responsible for managing some of our community on Discord, and I also am heavily involved in the engineering department within Klima DAO. And I also do some work on partnerships with various crypto projects, as well as financial institutions and other legacy operators in the carbon offset space.
Awesome, thank you very much. And you're going to be telling us all about how Klima DAO is changing the world, which I'm quite excited about. And then on to Marco. So Marco is going to give us a big overview of what's happening in climate tech. So I'm going to hand over to him. Yeah, feel free to take us away, mate.
Yeah, thank you so much for having us and me, Gustav, and hello to everyone. I see a few familiar names and faces, so it's great to reconnect with everyone. I'm sorry, I have just this blippering in my video, and I want to blame it on Marcus. It has never happened before, but I think he's also doxing me. So yeah, I hope that will be okay. Before I want to start with kind of like going into the slide, I have like basically two disclaimers. And maybe I should start with my background before I'm getting carried away. So I did a PhD on the application of blockchain in the climate space, basically spending half of that time figuring out what to use blockchain for and what not to. So that's also the first of my disclaimers. Blockchain is not a silver bullet, but it is a promising technology to create better systems. But in most cases, it's absolutely not applicable. And I think that the promising use cases you will hopefully see today, and we'll go more into depth with it. But yeah. And the second one is that I would really like to detach this conversation from this notion of Bitcoin and energy consumption. Yeah, I think there has been a lot spoken and written about, and I don't want to go down this rabbit hole, but just mentioning that we, in terms of our organizations, are not building on anything on Bitcoin or any other proof of work energy consuming cryptocurrency. But we are using different architectures, which is not only driven by environmental considerations, but also just for architectural and technical considerations, like, for example, using tokens, smart contracts, and an easier way of Oracle integration. And then also the third disclaimer is that we don't want to speak too much about just blockchain technology, but rather having a more holistic approach to like what are the systems that we want to create and using blockchain as a tool for it. So this call shouldn't be about just nerding around blockchain and going too much detail on the tech, but really thinking about how can we use this tech in order to provide the solutions that we need in the climate space. And I think that's a good translation to the first slide, which shows kind of the timeline that we're on. And outlining kind of what has happened so far, which is not much. We are running on a high trajectory, and we are way above the trajectory that we need to be on. And at COP, at the recent climate conference of parties in November in Glasgow, there was a lot about speaking about accountability of actors, so holding actors accountable and kind of nudging them in the right direction. But yeah, and even the Secretary General came out and spoke to creating accountability task force, and it was really like one of the most essential themes in the negotiations. But I think for me, that goes like one step ahead of what we actually need. In order to have accountability, we need transparency. And we don't have transparency. We have a lot of heterogeneous, fragmented actors, and we don't really know what everyone is doing. We don't have the mechanisms to create accountability, which is kind of then needed to create trust and ambition over time. And the entire Paris Agreement is actually kind of like founded on the notion of accountability and creating mechanisms to incentivize actors to lower their emissions. So the central element of this is the Paris Agreement Global Stock Take, which is all actors coming together and taking stock of what they have been achieving, which will be taking place in 2023 and then every 5 years from then. But given that we have basically a 10-year timeline, this mechanism is way too slow and hasn't really proven effective so far. I mean, it is just initiated in 2023, but we can just see that in the accounting space, we didn't see much changes over the last 10 years. So we definitely need to think about ways of harmonizing the actual landscape. And just to show what the current problems are, is there is a lot of information asymmetry between the different levels of governance in the system. So we have the nation state actors that are part and integrated in the Paris Agreement at the highest level. They have to report their process, but also like at least 2/3 of these countries don't have very meaningful experience and capacities in order to do the proper accounting that is needed to show their progress. And then non-state actors or subnational actors have been recognized as an important force of driving ambition. They often exceed the ambition at the national level, with what they self-declared ambitions are. But then the mechanisms of coordinating between the state and the non-state level are not really clear, and there is a lack of transparency, and the integration is not really given. And just to throw out some numbers there, currently there are around 20,000 non-state actors that have pledged over 30,000 pledges, but only 10% of these pledges are reported on. So only 10% of the actors are actually doing reporting, and then 90% of this reporting is self-reported, which kind of narrows it down so that we can say like only around 1% of all the accounting from the non-state actor front is actually verified accounting, which is a frightening number. And then like if we want to come to the ambition levels, we need to grow these numbers a lot more. But it just shows as an example how this fragmentation is. And this call is, or this is really to set the scene for an argument that we need to scale up ambition through technology. And technology has been a great disruptor in the past and has become or can become a tool to scale action. And I think this is kind of like a good way of translating that to Klima DAO and Marcus Aurelius. And maybe just to add a bit more context to it, I think Klima DAO is not even a year old. Probably it's like 6 months old for the ones that are not familiar with you, but they have reached a market cap of over $1 billion. It's at some time. So it can, like, it is just an example of how fast a community of dedicated actors can scale climate action if they find the right vehicle for that. And hopefully I'm right with the data, Marcus, and I think I'll just let you take it away from here now.
Thanks, Marco. That's a great setup. Yeah, in terms of the scale of Klima DAO and when we started, we launched our protocol on chain on October 18th, so just about 3 months ago. And the project has been in development for about 3 months before that, so it is all happening very quickly. Just to give some background, Marco had mentioned this choice of technology and the climate impact of the underlying technology that we chose. So one of the choices that Klima DAO made in line with our environmental mission is we chose to run on the Polygon blockchain, which has a very small carbon footprint overall. One of our carbon market experts recently did an estimate that the entire Polygon network has only emitted about 345 tons of CO2 for all of 2021's transactions, which is orders of magnitude smaller than the Bitcoin network, for instance, and more in line with a traditional like web server operation rather than a blockchain as most people think of it. So I'm just going to share some visuals. This first visual is very similar to what Marco was setting up around the need for drastic action rapidly. This is just showing the emissions reductions required to stay on the path for 1.5 degrees Celsius warming since pre-industrial levels. And the key thing I want you to take away from this visualization is that we need to attack this problem from both sides, right? We both need to incentivize emission reductions, and we need to increase the scale of negative emissions, right? So sucking carbon out of the atmosphere or otherwise drawing down the amount of greenhouse gases. So the way that Klima DAO intends to do that is by creating financial incentives in the carbon offset market. So the idea, I'm sure many of you are familiar with the carbon offset market. We're focused right now on the voluntary market, but we do have plans to expand into the compliance markets. But the idea is that we create a price on carbon so that polluters are forced to pay if they are going to continue emitting. And that creates an incentive to lower their emissions, right? Because obviously the more expensive it is to offset your emissions, the stronger that incentive becomes to reduce your emissions, to decarbonize your business. So the primary goal, short term at least, of Klima DAO is to push up the price of carbon offsets such that polluters are disincentivized from continuing their status quo emissions, and so that we incentivize the creation of more carbon offsets, which is to say we incentivize activities that draw down carbon out of the atmosphere. So historically, prices for on the low end of the carbon offset market have been in like the $1 to $2 range in the voluntary markets. And we've already seen a major impact from Klima DAO that has pushed prices on the low end of the market up to more in the $6 to $7 range, which is pretty dramatic for a project that's only been around for a few months. To give some context on what type of offsets we've been primarily consuming, we're mostly in a sweep the floor mode right now. So we're trying to get as many cheap offsets off the market as possible, such that it becomes more expensive for especially the unscrupulous polluters who aren't necessarily concerned about what type of offset they're using, but just want to be able to claim that they're offsetting. We are sweeping those cheap offsets out of the market and putting them into the Klima DAO treasury, where Klima DAO has no intention of using these offsets to actually offset our own activities, but rather we are essentially building a currency system where the backing value of the currency is derived from the value of the underlying offsets. So on this slide, we can see just a summary of the impact that Klima DAO has had in the voluntary market. You can see this big old bar on the right-hand side of the bar chart. That is the October retirements in Vera, and basically Klima DAO doubled the amount of offsets being taken out of the Vera registry in the month of October. And then on the right-hand side, you can see the composition of those retirements, and they are primarily renewables, which are considered lower quality in general these days, so like hydropower projects and other renewable energy installations. And the reason for this ultimately is that it's more capital efficient to sweep out those cheaper offsets than it is to say target very expensive like direct carbon capture. And again, the goal is to increase the price of all offsets, which will incentivize the production of higher quality offsets. Because obviously, if it costs say $20 per ton to produce a high quality offset, say through reforestation, and the price for those offsets on the market is only $10, it's not going to be practical for a project developer to go through with that project because they won't be able to make a profit. So the higher the price of carbon offset goes, the more technologies we unlock for actually drawing down carbon out of the atmosphere. So I just want to give a brief overview of how carbon offsets come on chain. because the legacy carbon offset markets, as many of you may know, are very illiquid and have very little transparency. So there's no, because most offset transactions occur over the counter or through a broker, there's no public accounting of those transactions. The only public data that's really available around voluntary carbon offsets is in the registry system. So in our case, that's Verra, at least for now. And in Verra's system, all you can see is who retired the offset, meaning who consumed it. You can't actually see like the price that was paid, or even who the counterparty was if there was a broker involved. All that information is very opaque in the legacy markets. So part of the reason that part of the benefit of bringing the offset market on chain is that everything is recorded on the blockchain for forever, basically. So there's a historical record of which wallets were involved in the transaction, and also the price that was paid for each batch of offset that's purchased. Let me just walk through the mechanics real quick of how carbon offsets come on chain, and then we can open it up to questions. You start with a carbon project developer, right? Someone is planting trees or installing renewable energy or actually direct carbon capture, whatever technology is being used. Some project developer has to make a real activity in the real world that actually has an impact on drawing down carbon. And then once the project developer has their project in place, they have a plan, and they go to a verified carbon standard, such as Verra's VCU, verified carbon units, or Gold Standard is a competitor with Verra. There are a few of these major registries, and the project developer has to get their offsets verified by a verifier and then listed in a registry like Verra. That process is pretty lengthy. It takes usually somewhere between a year and 18 months. And once those offsets are issued, then they can be sold to bring in revenue for the project. There are a lot of requirements around what it takes to get listed in one of these carbon registries. One of the concerns, of course, is that we need to make sure that the supply of carbon offsets can't just grow arbitrarily without actual activity being taken in the real world. And that's where the verifiers really play an important role for establishing standards and enforcing those standards. So once the verifier has issued the offsets, that's when the process of bringing those offsets on chain can begin. And that's done through a process called tokenization. We're partnering with another blockchain protocol called Toucan to develop that tokenization process. Toucan essentially built a bridge that allows a holder of off-chain offsets, Verra offsets, to bring those offsets on chain in a non-reversible way that prevents the double spend of those offsets. So once the offset has been brought on chain, the original offset can no longer be used by anyone to actually offset their own emissions. Instead, the on-chain offset has to be used. And there's a transaction hash that is embedded into that bridging event in the Verra registry, so that anyone can confirm that a particular offset was brought on chain and find the exact transaction on chain that brought that offset on chain. So once the offset has been tokenized into something called a TCO2, tokenized carbon, we have a bunch of metadata that's been brought in from the Verra registry, including the project type and the vintage, meaning what year that offset was produced. And that metadata is embedded on chain. So again, it's transparent, and anyone can go and inspect which individual offsets have been brought on chain. And finally, we can pool those offsets together into a sort of index of offsets. And this is where the liquidity comes from, right? Because each offset is in a certain sense unique, right? It has a certain project type, it came from a certain country, and it was generated at a certain year. But because markets really rely on fungibility, right? On the ability for a market price to be achieved among a basket of similar goods. We need to pool many different offsets together in order to enable a liquid marketplace on chain. And that's really what the BCT pool. So BCT stands for base carbon ton, and that is the primary asset that Klima DAO is working with. In the future, we do plan to expand beyond just the base carbon pool to more specific carbon pools. And the reason for that is that we want to be able to value higher quality offsets at a higher price, right? And so that the market can differentiate between, say, the low quality renewable energy offsets that we started with. And eventually, our next plan actually is to have a nature-based offset pool. So that includes things like reforestation and other activities that use natural systems to offset carbon rather than, say, renewable energy. So BCT will remain sort of the floor, the lowest common denominator for carbon offsets, and we'll be adding on top of that more specific pools that that represent those higher quality offsets. Another good example of that is direct carbon capture, which is obviously going to be priced much higher than, say, renewable energy or even reforestation, just because of the very capital intensive nature of direct carbon capture. Right now, most direct carbon capture projects are not profitable just because it costs, in the order of hundreds of dollars per ton to produce a direct carbon capture ton. But by pushing up the floor price, the hope is to make those offsets more economically feasible. That's pretty much it on this slide. I don't want to get too bogged down in the details of how Klima DAO works internally. There's a lot of crypto language that I'll have to start throwing around, but I do want to take a minute to step back and just, I'll put up this slide, but if you have any questions about what's going on here, I'm happy to address them during the discussion. But the basic idea is that BCT is our reserve asset. So it's what goes into our treasury. And that treasury can be used to issue a currency. And that's what the Klima token is. So each Klima token is backed by at least 1 ton of BCT held in the Klima DAO treasury. And the treasury has no intention of ever selling those BCTs. It's kind of like in the old gold standard system, right, where the Federal Reserve would hold gold physically in vaults to back dollars. We hold BCT in our treasury to back circulating Klima. And so because that's our backing value, we have no intention of ever selling it. And so it's effectively off the market. Let's see, in terms of how BCT is traded, so we have listed BCT on a decentralized exchange called SushiSwap, and that is now the primary market for BCT. So anyone who wants to participate in the on-chain offset market can make a wallet, a crypto wallet, connect to the Polygon blockchain and buy BCT on SushiSwap using any other token of their choice. And that BCT represents 1 ton of tokenized offsets. And right now, the main use case for BCT is actually bonding into the Klima treasury to help us grow our treasury. And that in return, the bonder receives a discount on Klima. So that's sort of the economic incentive for more and more BCT to be sucked up into the Klima treasury. And the net effect of that is that the supply of BCT on chain, the circulating supply, goes down, which pushes the price up. So we really have 2 goals right now. One is to grow the size of the Klima treasury, and the other is to bring more offsets on chain. So right now we have about 3.5% of all of the Vera offsets outstanding brought on chain in about 3 months. That's a total of about 14 million offsets. And the goal is to grow that to like 51%. Once we have 51% of Vera offsets on chain, we've effectively, become the real market, right, for Vera offsets. The other aspect of the BCT Klima bonding dynamic is that the more BCT we have sucked up into the treasury as a percent of total on-chain supply, the on-chain price goes up. And as the on-chain price goes up, that creates an arbitrage opportunity for any holders of off-chain offsets. Basically, the higher the on-chain price goes, the more cost-effective it is or profitable it is for an off-chain holder of offsets to bridge those offsets on chain and capture that arbitrage. So we essentially create a flywheel effect where the more BCT gets sucked up into the treasury, the higher the on-chain price goes, and that attracts more Vera offsets to be bridged on-chain. That's pretty much all the content I had. I want to make sure we have plenty of time for questions because this is definitely a complex protocol. But just to give a sort of summary, we've already had a dramatic effect in the legacy carbon markets. We've been reported on by pretty much every major carbon market reporting outfit, including S&P Global Platts, Carbon Pulse, Macquarie. We're attracting a lot of attention. A lot of the brokers that sell these voluntary offsets have actually sold out, and now they're estimating delivery in February of 2022. So basically, the people who operate in the carbon market space are noticing Klima DAO's activities and beginning to stockpile carbon ahead of time before they actually need it, to avoid having to pay, say, 10 times more in a few months, assuming that Klima succeeds in our mission. I also wanted to mention that we started out with Vera because they are the market leader in offset verification, and the main registry. They control about 70 to 80% of all the offsets being issued right now. But we are planning to expand beyond Vera. Next is Gold Standard, who is Vera's main competitor. And we're hoping to have them start onboarding some of the tons from Gold Standard as early as January. And just to maybe clarify a little bit about like what Klima is, we are not a traditional corporation. We are a DAO, a decentralized autonomous organization, which basically means we're a bunch of people on the internet who are coordinating in a decentralized way to build this project. And we have a core team of about a dozen people that sort of founded the project, but we now have over 40,000 people in our Discord server, of which about a few hundred are actively contributing their time and energy to building the project and expanding our reach to achieve our goal.
Awesome, Marcus. I'm going to ask if we can hand over to Marco now, just to give us the work that the Open Earth Foundation is doing. But thank you so much for that incredible introduction to the work you're doing, Marcus. And I'm sure there's going to be many questions from the audience. So Marco, you've got about 7 to 10 minutes, and then it would be great if we can open up to the rest of the community so we can have a nice, interesting discussion together.
Sure, I'll make sure to keep it a bit shorter. So in this call, I'm wearing basically two hats. One is from the Data-Driven Enviro Lab, which is a university outfit organization that is using big data approaches to track non-state actor progress towards their climate pledges, specifically focused on cities. And then the Open Earth Foundation, which is working on building kind of open architecture to really build the digital infrastructure to combine and create interoperability between a lot of these different accounting outlets. And I think like yesterday I read that climate change is basically a coordination and incentive problem. And I think just from Marcus's presentation, I think they are working on the incentive side, and we are working on the coordination and transparency side. So maybe just to highlight that. And what we are focusing on is creating a nested approach of the climate actors. So before I was talking about the need for accountability and the important role that non-state actors and subnational actors are playing. And there is a strong need to integrate these actors more and create a stronger interaction between the state level and the non-state actor and subnational actor level. And the way we are approaching this is to create a so-called nested climate accounting system, where we are using spatial referencing, like geotagging, for example, and timestamping to be able to attribute where the climate action has been taking place, and then really trace it throughout the entire value chain. So kind of like rolling it up from the local level to the international level, where our vision is also to create a closer to real-time data system that can inform governance and cooperation decisions. But just looking at the climate space, there are kind of like, we see three different verticals that we need to harmonize and integrate with each other. So the first one would be the nested accounting system that I described in the previous slide, which is really about getting local data to the international scale in a transparent and fast enough way. But then there are also other approaches that are evolving now, using kind of Earth observation data, something like satellite data or drone data, which is really about creating very big data sets and then using machine learning to find the ground truth and identifying, for example, like, has there been deforestation? So scaling down from the planetary level to the local level, which introduces new challenges in terms of like, how do you, is it bottom up or top down? How do you harmonize these different data sets with each other? But then also recognizing the importance of the existing climate accounting system. So there are also like 40 countries roughly that have been doing country inventories for a long time, and then a lot of other actors have been reporting as well. So how do we build on these existing systems, and how do we harmonize them with kind of like the emerging technology approach, and with really the idea of creating a triangulation of data, and also that each of these verticals is informing the other one, so that the Earth observation data, for example, can be used by specifically countries with more limited capacities to include this information in their inventories, and also, influence how they are doing their inventories and how they estimate their emissions. And we haven't been really speaking too much about the technologies as such, which was on purpose, but I think also just kind of like speaking briefly about the role of blockchain and other emerging technologies. So for us, it's kind of like a three-layered approach. We are often speaking in the climate change world about digital MRV, monitoring, reporting, verification. So if you would translate that into technological approaches, we have the IoT sensor approach for data collection and monitoring, which would be something like smart meter devices for the local level, or something like drone data or satellite data for the more like bigger approach. Then we have AI or machine learning for data verification, or you could even become fancier and do something like data predictions or something. So to project what the emission trajectory will be in the future based on the data that is collected in a real-time basis. And then the third one, blockchain or DLT, is really about creating an international data layer for reporting and processing of data, so that we can actually enforce accountability and also make data accessible for everyone who needs to have access to it. And maybe just on a closing note of reflection is that our aim is really to build open and inclusive architectures. So we don't want to build these technologies out as a toy for the global north, so that we can just play around and make our global north action a bit more transparent. But it is really about creating inclusive systems so that the global south can effectively participate and maybe also leapfrog into architectures that they don't have access to at the moment, instead of kind of trying to replicate the legacy approach from the global north, which is very cumbersome and insufficient in achieving these governance and cooperation mechanisms that we actually need to achieve the Paris Agreement. And I think with this, I will end here and head it back to Gustav for questions and reflections. Thank you.
Thank you, Marco. Wonderful. I'm going to pin Marcus myself, and now I want to open up to the audience. We had one question that came up, Marcus, during your presentation, which was a question around the standards. So standards like the gold standard for carbon, and the use of voluntary standards in relation to carbon trading with blockchain. I think Eric looks like he's curious about, what is the role of those voluntary standards in relation to carbon trading with blockchain, and are we trying to move away from that? Or, what's your perspective on the progress in terms of how you're engaging with different standards based on their complexity and price?
Yeah, you're absolutely right, Eric, that the existing voluntary standards as administered by Vera and Gold Standard are complex and very expensive to interact with. The other major concern is that they take a lot of time. So it can take as long as I said, up to a year or two to actually get offsets issued once you have a project in place. So longer term, what I would love to see and what we're trying to push for is a disruption in the traditional offset verification space, where instead of using very old school, like paper-based accounting methods, where auditors are literally sent around to each of these projects to physically inspect the project, and they often use pretty outdated technologies like random samples to assess the effectiveness of the offsetting project. So what we're hoping to do is to push for more modern registries that use, for instance, IoT data to gather sensor data directly from the project and analyze that remotely, rather than requiring carbon intensive and expensive trips for auditors to physically visit the site, right? If you're flying an auditor out to evaluate your carbon offsetting project, it seems pretty counterproductive to the overall goal of reducing carbon emissions if you have to pay to fly these people all around the world. So kind of in line with what Marco was saying, there's a lot of new technology that can be used to monitor these projects without actually requiring a physical person to go and visit the project. And that would dramatically reduce the cost of registering and issuing offsets through a registry like Verra or Gold Standard. But it's not totally clear that these legacy players are interested in changing their business model. So there are a few exciting projects that are coming online that are more natively supporting these new technologies like IoT and remote monitoring. One example is Regen Network, which is a blockchain project oriented around soil sequestration by farmers. So they help farmers install IoT monitoring devices on their land and monitor the amount of carbon sequestered in the soil by the farmers' practices remotely. And then they record that remote monitoring data on a blockchain, which allows for much greater transparency and auditability of the offsetting activity compared to like a physical person auditing. Another exciting project is called uCarbon Registry, which is trying to build a decentralized verification network where they use video data collected by local people on the ground who go to a offset project and record video on their smartphone and then upload that video into the cloud so that it can be verified by a global network of individuals rather than a centralized system like the way that Verra and Gold Standards auditors work. Yeah, I think that addresses the question.
I think that does. Very interesting. Really, really, really interesting. I want to hand over to Mark Liberati, and before I do that, I just want to say, please do raise your hands and ask questions out loud. We want to have kind of an interactive discussion, and if possible, also please turn on your cameras as well, so Marcus and Marco can identify you for the rest of time. Mark, over to you, my friend.
Thank you very much, Gustav, and I just thank you both for that those fascinating presentations. I just had a few questions. For Marcus, I was thinking, as you said, the Verra certificates they're ultimately attached to a unique project, but you chose an ERC20 token to then be represented. I was just curious why that design choice, because why not like an ERC 721 that'd be an NFT unique to that one project, and then you could pool them together and tokenize, because it was sort of the second part of my question as to your pooled reserves, because when that to avoid double counting, that when that token is then provided to the offset purchasers, that then you could then attach it to the reserve burn, and you could link it very clearly because you would have the NFT to be very unique to that individual Verra certificate. So just curious why you chose that design choice. And then I think to Marco, I was curious on, getting to that a bit what the Klima DAO approach is in trying to have a price for carbon, where you're dealing with very disparate markets and you're putting them in a nested format. And what thinking has been in sort of how you can tokenize at each stage and maybe have automated market makers so that you could arrive at that global price, because in tying those disparate markets together, so that then you could set sort of a global price for carbon and allowing effectively for a transfer from the wealthier countries to the global south, who would be providing the offsets. Over. Thank you.
Awesome. I'm going to go Marcus first, then Marco. Go for it.
Sure, that is an excellent question, and in fact, we've been partnering with Toucan, who actually implements this whole bridging process. And you're absolutely right. An NFT is the appropriate way to represent the original Verra offset, and that is in fact under the hood how Toucan works. Not to go into too much technical detail, but basically, when you bridge a Verra offset, something called a batch NFT is created, which represents that specific bridging event. So that batch NFT can be tied directly back to the retirement event in the Verra registry for a specific set of offsets from a particular project with a particular vintage. And then that is fractionalized, that NFT, into a set of ERC20s. And that's what TCO2 actually is. So those TCO2s still have the metadata about what project it was and what vintage it was, but they're not liquid because obviously it's too small of a market for just one project from one vintage to trade. And so it's those fractionalized TCO2 ERC20s derived from the underlying NFT that are pooled into BCT. Yeah, great point. And then I think you were asking about how when an offset consumer receives BCT and they want to consume it, right, to actually offset their footprint. What would happen under the hood is the consumer can choose to unwrap that BCT back to whichever underlying TCO2 in the pool they would like to consume. And then that individual TCO2 is what's called burned, which is just the on-chain notion of retirement. And they receive an NFT certificate that states like, you know, this many tons of this particular project from this registry with this vintage were consumed by this address.
Awesome. I can see Mark is nodding seriously right now, so he must be quite inspired. And for the others, we can get into some definitions for those who maybe don't have the same experience and knowledge about blockchain. If you want to get more detail, please feel free to reach out to me, and we can get into more of the nitty-gritty and help kind of bridge that technical gap. But thank you very much, Marcus. Marco, if you'd like to answer the question that was directed at you, my friend.
Yeah, and I think I get a bit more philosophical as well, and also responding indirectly to what Mary has been asking in the chat about incentives and what we need. So I think for me, what we need right now is transparency first. We need to have like a good accountability mechanism so that we know who's doing what, and we don't know that at the moment. And I think just creating this accounting backbone is needed in order to really drive incentive mechanism design. I guess Marcus will agree that even if they just buy every offset in the world right now, they won't get us anywhere close. I think they're just starting creating incentive systems. So what we really need is a holistic system that provides us with the data and also enables us to create these assets at the global scale, because the participants and actors playing in this space is very limited and absolutely not at that scale what we need. So our focus with what we're doing is really initially just creating interoperability between every accounting system in the world and creating global transparency. And then on top of that, I agree with your point, Mark, that like we can use a lot of like market mechanisms and everything to design that. And I also really like your point with NFTs. But I think my caution is that I don't know if we are there yet. Yes, we are there, that we can tokenize and have the metadata for Vera and for Gold Standard, but we don't have that at a global scale. And especially if we want to involve the global south, I mean, they are using IPCC tier 1 methodology at the moment, which is basically a guesstimated Excel file set in a drastic way, but they are not, they don't even know like how much are they emitting each year. And if you want to build NFTs, you have to be very specific and you have to have a very high data granularity. So, and then on the other side, you also have to have entities that are evaluating the value of this. So that would mean that you need to go into the NFT and think about, oh, how is that different? And how do we come up with a price and creating market dynamics around that? And I think we are not there yet that we even have the expertise to develop a proper market around it. So I like the approach of Klima DAO, just using fungible tokens, saying that every carbon offset right now is the same, and then scaling it up to have more dedicated pools, which again creates a different price differentiation. And then at some point in the future, you can go at the very granular level and say each initial certificate has its own price in a sense, which would be the NFT approach. So I think it will take time, and we have to recognize also where we are at the moment. I didn't want to criticize the incentive design. I think it's absolutely fabulous. And I also love Marcus to speak a bit more about how the nudging is working. I think he mentioned in his presentation that already some corporate buyers are starting getting nervous that the price is rising rapidly and that they might also need to buy it to lock in the price on something. I think this is already planning out at a small scale. Yeah, so I went into a lot of different directions. Gustav, I'll let you sort it out.
That was great. That was a fantastic. I think that was a fantastic answer. Mark, give me a nod if you feel like that answered the question. Legend, wicked. All right, I want to hand over to Loon Lee. So Loon Lee has a blockchain question. Loon, would you like to answer your question, to ask your question live? I can.
Well, actually, as far as I know, it is for project of Olympus Style, and I would like to ask why did you choose the Olympus Style fork? Because as you know, there is a kind of a bad image about the fork project of the Olympus Style. I like the goal of using the incentive system of Olympus Style for the carbon offset system, but I like to hear about the background, and I like to know how will you overcome the shortfalls of the Olympus Style's structure.
Yeah, so I can give some background. Klima DAO is a little bit unique compared to the other Olympus forks right now. Just for context, Olympus DAO is a major DeFi protocol that launched earlier this year in April, and the mechanics are very similar, meaning we basically took the Olympus DAO monetary policy and smart contracts and replaced, they use stable coins as their reserve asset, meaning essentially a dollar value token. And instead of that, we are using carbon offsets as our reserve asset. But in terms of how Klima DAO came about, we actually were founded, our core team is mostly composed of Olympus DAO contributors who were very involved with Olympus DAO from early on. And the idea for Klima DAO was actually formulated within Olympus and sort of spun out as its own project. So I would differ, and Olympus has had a bunch of sort of public spats on Twitter where forks have claimed to be officially endorsed by them, when in fact Olympus DAO has not officially endorsed any forks. Klima is a little bit of an exception to that rule, just because I like to think of it as us as like a child protocol, like we were an offspring of the Olympus community that's focused on a much more specific project, right? Driving up the price of carbon offsets. So that's sort of the background. In terms of how the game theory of Olympus works and any negative feedback loops that can ensue, ultimately the protocol is designed around a game theoretic analysis of individual behavior. So the classic trope, the meme is 3-3, which basically, if you're familiar with the prisoner's dilemma, it's the cooperation where everyone cooperates, payoff is the highest, right? If both criminals don't lie, or if both criminals don't disclose the fact that they are guilty to the police, then both criminals will go free. But if one defects, then the other person will lose out. So that same concept of a Nash equilibrium, right, where the dominant strategy is to cooperate, that is the foundational game theory of Olympus DAO and also of Klima DAO. So what that specifically means is that participants in the protocol are incentivized to remain staked, meaning to leave their funds locked up in the protocol, as long as essentially there is money in the treasury, right? As long as there are reserves that can be paid out to the stakers, there is a strong incentive for everyone to stay staked. The main way in which this positive feedback loop, this cooperative dominant strategy breaks down is if the treasury is managed poorly. So if, for instance, we ran out of DCT to pay out rewards, meaning to mint new Klima to pay out rewards, then stakers would no longer have that incentive to remain staked. I realize this is all getting quite technical, but the main negative feedback loop that I think you're pointing to, Lou, is what would happen if a bunch of people started to unstake and flee the protocol. What would end up happening is that the incentive mechanism, the APY, the reward for staking, would go up and up and up and up the more people unstake. And that would create an effect where the last staker, the last person remaining in the protocol, would basically own the entire treasury. And that would create a strong incentive. As more people unstake, that creates an incentive for people to stake because the APY goes higher and higher and higher. I think that was what your question was. I noticed that in your written question, you asked about the negative feedback loop when people start exiting, meaning they unstake and take their money and run. That really is managed by the treasury, right? As long as the treasury is being managed in a responsible way, such that there's always more rewards in the future, that creates the 3-3, the cooperation dominant strategy to continue staking. What has happened with a lot of other forks of Olympus that are a little more, how do I say, unscrupulous or short-term minded, compared to Klima is they have not managed their treasury very effectively. So they've either diluted their stakers by issuing a ton of their token to people who are not staking, who are bonding, or they have paid out such a high reward rate to their stakers that they've run out of runway, right? They don't have any treasury assets left to issue rewards. And at that point, the protocol does die. So it's really treasury management that's the critical piece to ensuring the long-term sustainability of the protocol.
Awesome. That's the I think that was quite a technical answer, but one that I think most people probably understood, which is that if you don't have any money in the treasury, then no one's going to buy the paper as such. So it makes sense. Any assets, maybe is a better word to use here. So we've got about 7 minutes left, so we're going to take 2 more questions. Eric's asking another question, which is, I mean, maybe I'll invite Eric to just quickly ask your question, because I'm curious about what you mean when you say this work, and yeah, just curious to hear what your question is.
Yeah, maybe to explain better. So there's this whole thing around greenwashing. So there are a lot of people easily shouting out, "This is all greenwashing," and from stakeholders which are to be taken very serious until less to be taken serious. But anyway, it would always be good to think through how do we anticipate on this. And one thing is what I believe, that whatever we are doing now in methodology, it's kind of version 0.1, and this will be completely different from how we think about this in 4 or 5 years. So but based on the fact that it's not perfect as of today, a lot of people will just label it as this as greenwashing. So how do you anticipate on this? And it's actually a question for the both of you. Thanks.
I can jump in first. So I agree, and the greenwashing narrative is really important to get ahead of, because once people have it in their head that carbon offsets are just greenwashing, it's very hard to undo that. So the way that Klima DAO thinks about this is that the lower the price of carbon offsets, the easier it is to treat offsets as greenwashing, right? Like basically, if it only costs you 1% of your annual revenue to offset all your emissions, then it's an easy choice, right? To just say, oh, we'll pay the $100 million or whatever it is to offset all of our emissions and just continue business as usual. So the perspective that Klima DAO takes is like, by pushing the offset price up, we are essentially disabling the greenwashing strategy, right? We are preventing companies from cheaply offsetting their emissions. So yeah, I guess the greenwashing narrative, there's a certain grain of truth to it, which is cheap offsets allow status quo to be enabled. But ultimately, we don't have a choice here, right? We have to start engaging in carbon negative activities, and offsets are one way to monetize that, right? To create a financial incentive around it.
So I think we also have to recognize where this greenwashing narrative is coming from. And I think it's coming from the general mistrust of actors in the system right now that, accounting, I'm speaking broadly about the climate. I think if we speak about varying gold standards more specifically, it's a different thing. But at the moment, most of climate pledges, of climate targets are self-reported data. So it's basically trusting the entity that what they are reporting is correct. And that needs trust. So and the way you create trust normally is that you come from transparency, you make every information a lot more available, you create resilient reporting systems where you can trust, or where you can actually follow, not trust, where you follow how the asset is generated with a lot of data, and then and especially using digital technologies like sensors for that, creates this traceability throughout the entire value chain of the project. And as Marcus said earlier, at the moment, the legacy approach to accounting is very fragmented and spotty and delayed. So we use some random sampling. We are not really sure about what methodologies to use. And digital technologies, I think, are a very, very important piece, possibly more important than DLT as such, because they enable us to really take a holistic view at what is out there, and really allow us to get to data at scale. At the moment, we have very limited samples of data, and yeah, being able to report that creates the transparency that we need in order to create accountability that then leads to trust over time. So I think it is actually because of greenwashing and mistrust that we need these new approaches to it, because clearly the approach that we have been following the last 10 years has not been sufficient and has brought us to this point where like the incentives and the reporting is very misaligned with our actual goal and what we should be doing.
Awesome. Yeah. So I mean, there's there we go. Eric saying thank you very much for the answer. Now we have 2 minutes left, so we don't have any time left in reality. So I just want to say a massive thank you for those to Marco and to Marcus for being here, whoever Marcus is out in the metaverse. It's been such a pleasure hearing from you both. I think I'd be really curious to continue the conversation to understand, how can we learn from what these guys are doing? How can we integrate the thinking? How can we apply that thinking within the work that we do at the UN? Where do we meet in terms of the kind of both the technological approach and the philosophical approach to how we build systems that enable climate justice, but also justice from a perspective of all the myriad communities that we work with and work for. So maybe I'll just ask you, Hannah, is there anything else that you want to say, that any updates you want to give to the community as a whole before we close the call?
Not really. Thank you, Gustav, and thank you, Marcus and Marco. I think, Gustav, you had wanted to put another call out to share blockchain innovations in the climate space, right? So if any colleagues in the UN are working on blockchain for climate, we would love to hear from you. Feel free to reach out. We'll share an email address. But no, other than that, thank you to you and Marcus and Marco.
Awesome. Marcus, any last words?
Yeah, thank you so much for having us and also being open-minded and really fascinated by this innovation. And yeah, I hope you keep an open mind, and this was inspiring. I also posted a recent video on our nested accounting approach in the chat for kind of a more in-depth. I got quite philosophical most of the call, so I didn't really get into the nitty-gritty. But yeah, please feel free to reach out, and happy to continue the conversation.
What's the best way for the team to reach out to you? I guess what I'll ask is maybe I'll ask people to reach out to me, and then I'll forward the queries out to both Marcus and Marco. But Marcus, go for it, mate. Your last words.
Yeah, thank you all for having us. I hope this has been an interesting discussion, and you're inspired to see what blockchain can do to fight climate change. It's the urgent problem of our time. So I know we're all eager to do whatever we can to make progress here.
We most definitely are. All right. Thank you very much, everybody. Thank you very much, participants. Nice to see so many friendly faces. Nice to see you, Mark, Eric, Mark Belinsky, Aaron. Fantastic to see you all. I hope you all have a wonderful rest of the week, and see you all soon.